All right, so we'll be going to the second strategy. We've done strategy 1. Let's go to another strategy now. And this time around, we're going straight to synthetic. So let me share my screen on my mobile. Let me share my screen. You can see my screen, right? Wow.
Yes, we are seeing it.
Okay, this is the trade I just gave now. The trade almost hit the TP, but it did not hit the TP. It's pulling back. Now this trade will
we are not seeing it, sir. We're only seeing your normal screen, your phone screen.
Yeah, that is it now.
That's this now. You are seeing my mobile?
It's not that it's showing up.
Your network is slow. Okay, so I get this signal presently. This signal is running on the group. I don't know. Is there anybody here who is not on the signal group?
Yes, I'm not on the signal group.
Okay, which means you've not created your WellTrade account.
I've done everything. I've created the account.
But you've not sent me details now. You're supposed to send me your account ID, your client ID, so that I verify your account, then add you to the group. All right?
Okay,
so
I will do that after this.
Okay, so I gave this trade this morning, all right? And so far the trade has done
wow.
Okay, so $15 is the target, and is going there now. All right, so this is one of the strategies. But this strategy, this one now, I can't call it a strategy for you because this is more like price action. All right, this is more like, because here I don't really combine anything. What I do here is just to look at the candlesticks pattern. All right, but before then, I want to close this trade. Let me close this trade because it's going to pull back from here now before it will continue downward. So let me close this trade with $12.45. Okay.
And I live with this, so.
Come again?
And this live account, though.
Before, it would have been what?
Okay. That is good.
I laugh in dollars.
Please give me a few seconds. Let me give an update on the group.
Mr. Tam, good morning, sir.
Morning, ma.
You're using Derive, right?
Yes.
Okay. I'm on Derive too. So are you doing crash and boom?
Yes. I've been doing crash and boom for now. I just even closed a trade not quite long.
Oh. I was on crash this morning, but on boom this morning, but I was really going against. I had to close the trade.
Which of them?
Although the demo account, I've not funded yet again after I lost so much.
Boom, what was that?
All right, so
For the 500.
Here we are talking about pain and gain, not boom again. Here we
understand.
We are pain and gain. So start trading pain and gain. All right, so these are actually my strategies. Okay. So let me show you. This is one. This is one.
Your screen hasn't come up.
Oh, I've not shared my screen.
It's not showing.
Okay, so
yes, it's not shared.
Let me share my screen. You guys don't want to miss anything. You want to get everything 100%, and it's good. Okay. So my strategies are now, this is one of my strategy, and this strategy is used on lower time frame alone. Now you use this strategy on 15 minutes, 5 minutes, and 1 minute. If you use it on if you use it on a higher time frame, it will not give you accurate stuff because your stop loss and they will just be doing nonsense. All right. So this particular one is for 15 minutes and below. So now let's before we begin to look at it, let's talk about the setup. Now, it's the same thing in your mobile phone, right? This is MT5. So the same way you have it here is the same way you have it on your mobile phone. I will also show you on my mobile phone. Okay? Okay. So this is actually Vol 40. In short, we are going to analyze a trade now that we will enter. So whether you're on your demo or you're on your live account, you're going to be entering the trade. Let's see the outcome at the end of the day. So let's first of all, let's look at the indicators. Now, but one thing I want you to know is that in as much as, yes, we are talking about indicator, don't throw away price action. Don't throw away market structure. What is market structure? Market structure is the market, is it buying? Is it on in an uptrend? Is it consolidating? Is it a downtrend? All right. Price action is what is the history behind the candles. All right. What is the chart pattern? Okay. Those are price action. All right. So you don't want to throw away that. Now you are doing a combination of all of these to take your trades. So I told you guys I was going to give you Candlestick Bible. I know I've not dropped it, but I'll drop it after this class. If you have the time, go and study the Candlestick Bible. It will help you a lot. Okay, so on this strategy, simple. On the main window, which is the chart, we have only two indicators. The 20 moving average and the 200 moving average. And both of them are exponential. I don't use any other moving average apart from exponential. There are people who use weighted. There are people who use simple. There are people who use different form of them. But me, I use only exponential. All right. Okay. So this is 200. This is, I believe you know how to put indicators on your phone, right?
Yes.
Okay. So that one is not an issue. So what you just need to take now is this one.
I can do for those who don't know.
Okay, no problem. When I go to my phone, I will show
for those who don't know.
When I go to my phone, I will show you. Okay? Okay, I'll show you on the mobile because it's the mobile that more people use. Is it not so? Okay.
Yes.
Okay, so now,
Sure.
so this is the main window. Then window 2, which is the oscillator. What I'm using here is the RSI, all right, and 2 moving averages. RSI and 2 moving averages. So this RSI is 14. RSI is 14. The red moving average is also 14 exponential. Then the blue moving average is 50, the same exponential. Okay? So now how do I use this? I told you I use this only on a smaller time frame. If you use it on a higher time frame, you will shoot yourself. Okay, but you want to know the direction of the market. Are we trending upward or we are trending down in the overall? So in the overall, you want to see in the overall, let's just say, just go back to maybe like 1 hour. Okay, so let's assume that 1 hour, you saw this now, there was a cross above, above 200. All right. So both the price that the candles and this other one has crossed 200. And another thing you want to note, you see one thing about price action, which you cannot do without. Now, can you see that after this cross above 200, now there was a pull back to the 200, which is this red candle. And you now got this engulfing. Hello? Now, this one engulfed this candle. You don't need to think twice. You don't need to even ask anybody. In as much as it's on 1 hour, this one will give you more pips. It will give you more movement. All right? Okay? But the reason why I said lower time frame, that is where it is more potent. Okay? But even with this 1 hour that you saw this one is very smooth. And you should know that this one is smooth. So that's on the main window. So now let's look at the oscillator, which is the window 2. Now look at this crosshair now. Now this is the oscillator. Now this black line, this black one is the RSI. Now the RSI at somewhere at this point crossed above, it was below 50. Okay? It was below 50, but at the time, the RSI crossed above the 14 and the 50. It came down again, bounced on top of it, and went up above the 50. Now,
hello, sir, can you zoom in?
I will. Okay? So this is what I'm saying here. But it's just that this thing does not, okay, let me expand it so that maybe you see it. Now, this is what I'm saying.
Better now.
This is the 50 line. Now, there's a way you master how to use RSI as an oscillator. You will know that when the oscillator is above 50, you are looking for buys. When it's below 50, you are looking for sells. Now, what is the beauty here? The beauty here is that you are above 50, above the 14 moving average, and the 14 is above the 50 moving average. So there's what we call EMA cross. That's when they cross themselves. We call it EMA cross. I have a strategy. We're still going to come to that one too. It's part of it. EMA cross. When all the EMAs cross. Okay, so this is the crossing. You have a crossing here, and after the crossing, there's an expansion. What this tells you is that.
Thank you.
Sorry, sir.
Thanks. Okay. What this tells you is that as long as there's this expansion, this tells you that the trade is going up. Okay? That's to tell you that this market is going up. So you want to confirm that. So we have confirmed that one now. Then you now, ordinarily, you would have been able to enter this trade from here. All right? Now, after all of this Kurukere movement here, and you have seen this oscillator, all right, do a very good crossing and separation. Now, after this red candle that closed, this first one did not engulf it. There came a second one, and did the second and the first engulf it? Yes. So the second one closed above it. Is a confirmation. Now, do you know that when we say you want to confirm if the market is actually going up or down, like you were looking for an engulfing, a second candle can confirm your engulfing. A second candle in that same direction, if the first one did not confirm it. So this one now is the confirmation. What do you want to do? You want to enter this trade from here. So now when you enter this trade from here, your stop loss can either be here, then your safest stop loss, you can use this as your stop loss. This is aggressive, right? But your safest one is here. Here is your safest stop loss. Okay? So you enter this trade from that point, you are riding. But so let's assume you miss all of this one. And before it now broke above the 200 moving average and now pull back and now became and saw this one. So this is where the meat is. This one is a very big meat, number one, because is a cross above the 200 and also the 20, the 20 has also crossed above it. By the time you want to enter here, the 20 may still be under, right? Because it has not moved to, but with what you have seen on this oscillation and with this price action here, you ride. You ride. So now on this trade, you want to look for your TP. Your first TP will be here. Now, if you've observed critically, you see that most times I take trades and I enter two positions. Now, the two position is that when you close the first one, depending on their size, the account size anyway. So this will be my first TP. When you close the first one, so this is the first TP here on this trade. When you close the first one, you want to bring the second one to break even, and you want to allow it to run. So what you just be doing is to begin to move your XL into profits. We call it trailing, okay? So you just be trailing stop, okay? You'll be trailing the market until maybe the market come and hit you out. It's going to still keep you in profits. Or it still give you room so that if it's a market that is going to trend for a very long time, you can be following it gradually, yet you know that you're already in profit. Okay? So this is this one on the desktop. So that's number one. But please note, this is my oscillator. It's the same thing across board. Okay? This is the oscillator that I use on MT5, okay? It's the same thing across board. So even if you come here, it's the same thing. Okay, so now on this is another one. This is another one. Here, all of them are almost the same thing, but there are some differences. So here we have how many moving averages? We have on the main chart, we have 1, 2, 3, 4, 5. So the first one is 14. The second one is 20. The third one is 50. The fourth one is 60, while the final one is 200. Okay? So this is vol 20. Now, the same thing I have.
All exponent.
Yeah, all EMA, yes. Oh. I'm fainting. Okay. So now, what are you looking for on this one? Now, this one, you can use it on any time frame, whether higher time frame, lower time frame, but you just want to make sure that you get confirmation. Then not forgetting that you want to look at the market structure always. Are we trending up, down? Are we in a consolidation? Don't always miss that so that you know the direction you are concentrating on. Even if you want to take a trade in the opposite direction, you know that it's a very short-term trade. So you don't want to remain on that trade for too long, and your target on that trade must not be too big so that it's quickly delivered and you go out of the market. It's as simple as that. Okay? So this is, on this particular one, you want to look for crossing, okay? You want to look for crossing. We call it EMA crossing, okay? So now, you can see that here, this market has been above the 200 moving average. Above the 200 moving average. So what do you want to do? Now, this guy crossed the 50 and the 60. So the 20 and the 14 cross the 50 and the 60 and now cross above this 200. Now, what you're waiting for is this candle here. And you now got this engulfing. You now enter this trade. You're entering this trade from here. You take it up to this point. Now, but before you know where it's going to go to, you want to go back in history and check. This one probably is too short from your entry. You want to go further down to check which is the next one. So you want to look at these legs. want to look at these 3 legs. Okay, there are 2 legs ordinarily. Okay, we want to look at these 2 legs. Which one is more convenient from that point? Okay, so this is actually where we enter the trade. So this will be your TP. But you know that in this case, it did not hit our TP. It did not hit our TP. So now there's a way you be in a trade and the trade is reversing. If you are not very sure of what is going to happen next, but you know that the trade ordinarily hit TP, but it took time to go back and forth because ordinarily, hello. Now, when you took this trade, this is where your stop loss would be. You took this trade from here, and the trade ran to this point. You are supposed to take profit, but it did not hit CP. Now, such a trade like this, when you see the reversal, you can close manually. So, but let's assume you forgot the trade. The trade will still come back, do like this, do all of this, because this is 5 minutes. This thing can do like this for the whole day, and at the end of the day, maybe by the time you come to look at it, it has even closed you in profit. Because you did not come to disturb it, it still put you in profit and even did far more. Okay? But all of those initial ones were just pullbacks, you know. So now let's look at another point. This now we have crossed below. We want to see that, we want to always see that we are below 200 before we take a trade. Then another thing you want to look at is the separation between the 60 and the 50. Whenever there is a separation between the 50 and the 60, even if there is a pullback like this and the separation is still open, can you see this one? There's a pullback, yet the separation is still open. Even here, the separation is still open. Here too.
Bless you.
Thank you. The separation is still open. Finally, the thing went down. So when did the separation close? The separation actually closed from here. It closed from here, going back to the 200. So you want to take this separation very seriously. The separation of the 50 and the 60. You want to take it seriously. Whenever the separation is open, all right, wherever is tilting to, that is the direction of the market. So you can see that when it opened from here, came and crossed above the 200. Then before this thing that happens here, this is where you should enter your trade here. And you ride up. Okay? It is still doing all of this one, but the 200 is still separated. You see all this pullback? The thing pulled back here, but the 50 and the 60 is still open. It did not close. It's still separated. Okay? And it still came, it went. So it is after, see where the separation closed. See where it closed. It closed here. But here now, there is an indecision somehow. But you can see now that after this movement, the 20 and the 14 still close above it. That's to tell you that this thing is about to still continue its upward movement. But you want to see, the best thing you want to see is when the separation has really taken place. Then the same thing I showed you on the other side, you want to see that the RSI has crossed above 50 and has also crossed above the 14 and 50, okay? And they are separated. So very simple strategy. You use it. And so this is another one. This one is pure price action. But even in, okay, it's not even this one. So this one is not when I say pure price action, I'm looking at this one. Pure price action, there is no, I did not put anything. Now, when I'm looking at this one, I'm looking at candles. I use all of them. Most times I want to do my analysis. I want to look at what is happening. Okay, take for instance now, this is the trade we took this morning. And this is where I actually started from. All right. Now, this trade has been trending up. It has been trending up. You can see my trend line. that's been trending up, and it came down and broke below the trend line and did a retest and came down. So all of these things are just, and then you see this line is a resistant line. So ordinarily, you see that first trade I took and I said probably our stop loss is too small. It's better that the thing take us out and we look for another opportunity to enter than to be in a drawdown that your account may not be able to carry. If it is just me, I know how to manage it, but when you give people trade, sometimes a good trade, they will not be able to manage it well. At the end of the day, to look as if it's a bad trade, but it's not true. So the safest stop loss would have been above this level. But I just choose a small stop loss that even if you leave your account, you won't cry, okay? And we got another opportunity to enter, and I closed, that first one closed us in negative of $4, $4.40 something. But when I closed it for the second time, I closed $12 plus. Is it not so? Meanwhile, some persons will close, I closed $12 plus. Some persons will close more than what I closed. Reason being that when I gave the trade, there was a pullback. So I was already in a drawdown before most persons would have seen, because by the time I click sell, it was already taking me negative before I shared it. So anybody who entered early enough will be in profit before me. Okay, so now we're talking about price action and how I entered the trade. And when I saw this bounce. This was the first bounce. Okay, this was the one we entered now that took us out. Okay, and the thing came back up again. And this is the one we enter now that is pulling back again. But I bet you see this market that has done this around here is going to actually come down. Even if it's going to go up, it's going to come down and it's going to interact with these points. Now, this is the point it's going to interact with. You see this point? It's going to interact with this point before it continues, whether up or down. Okay? So this is 193,218.97. So this trade, I got my eye on this trade. We may be entering again, but I need to settle down to begin to look and be sure of the movements, really. So this is, I'm trying to show you all of this before we go to the mobile where we'll do the setups, okay? This trade is going down. It's going down. It's going down. So this is another level of pullback. Okay. Then this one is just simple. It's the same thing. This one does not have oscillator. I know what I use them to do. I just use them to confirm each other. If you look at the strategies, my strategy is more like almost the same thing. I just use them to confirm each other. This one is 20 and 200. Now, 200 is very key for me. I don't joke with 200 moving average. I can actually trade with only 200 moving average, all right? And putting it on a plain chart like this one, I can put only 200 here, and I want to be looking above and below, all right? When I look above, I want to look at what has happened with price action. I look below, I want to look at what has happened with price action. And that's how I begin to take my trades. So I'll be stopping share here now. If there's any question, you can go ahead and ask me while we go to the mobile to do the setup. No question?
5,000.
Okay, so let me stop share so that we can go straight to the mobile. Okay, so let me share my screen. Oh. All right, so here I won't be explaining how to use it. I already did that on the desktop. So what I'll be doing here is just to explain to you how I put my indicators. Okay, so this is the plain chart that I actually use. Okay, this is what I use. Most time I do my analysis and I come here. Sometimes I looking only at this, only like this, I know what to do, okay? So as it's not all the time I have the chance to interact with the desktop. So this, I just use only the 20 moving average here, okay? So, but right now, I'm going to remove this, let it be a plain chart. Okay, so it's a plain chart already. Now, basically, what I showed you now is what I'll be showing you here. There are two ways, but the two ways is one have, this is one thing I hate about mobile, all right? Phone calls will just be coming to disturb what one is doing, okay? Phone calls will come to disturb what one is doing. All right, so how do I now add my indicator? So we have two. So I'm going to start with the first one. The first one is just only two moving averages. Okay. Moving average 20 and 200. So the 20, I always love using red for my 20. Then the second one would be 200. I always like using black for my 200. I believe you got what I'm doing, all right? When you click to add, you click on this F sign, okay? To add, you click on this F. You see my cursor, you click on the F plus, then you add. Okay, that's how to add. Okay, so let's go back to the chart. You can see that I have added the 200. I've added the 200 and the 20. So what are we waiting for now? We're going to be adding the oscillator. Now, for you to add the oscillator, you come here, you click on the F plus here. I click on the F plus. The oscillator I'm using is RSI, Relative Strength Index. So this is Relative Strength Index, okay? This is Relative Strength Index. I click on it. Now, the period is 14. Apply to close. Pixel is the thickness, okay? Pixel is the thickness, color is black. Now, let's come to level. You see this level? You want to make sure that you may not do the 5 and 95. So let me show you how to put level. So let me assume I only have 20 and 80. Okay, no. So let's assume I only have 20 and 80. So, so how do you add? How do you add? So to add, you click on the plus sign. Okay, I think my network is misbehaving on the mobile. I've been taken out on the mobile. The thing is bringing me back in now.